All right, so let's go ahead and move in. We're going to take a quick look at the markets today. The S&P 500 and the bond volatility, and this goes through to May 15th, 2023. When you look at this chart here, this chart is the S&P 500. It actually goes back to June of 2022. And you can see it's just been a big, volatile, sideways walk since about June of last year. We did have a dip in October, which was basically hitting our October lows, the low in this current market cycle. And the interesting thing when you're looking at this chart, a lot of people would say, well, it looks like we're kind of hit the bottom when we're coming out. But our concern is that many people are thinking that this run-up is actually the beginning of the bull market, but we think it could be a little bit premature. If you look at the leading economic and financial indicators, I think you're going to find a little bit of a different story. Now, you can also see that the S&P 500 is up 7.21%. If you look at the aggregate bond fund, which really takes in all bonds in the U.S., they're up about 3.49%. And as you can imagine, it's a bit different than the previous year, and we'll talk a little bit about that. Now, when you're looking at the economic indicators, again, there's 20 indicators here, and it's looking at different economic and financial indicators that we look at to kind of forecast to see where we are today and where we're going in the future. And with this chart, when you look at it, there is positive speed dials, and those are the ones that are green. And as you can probably tell, there's no green right now. So let's move on to neutral. There is a lot of neutral, and there is, unfortunately, a lot of negative. And when you think about the changes from the previous month, and that's what we're looking at, you look at the hands for each one of the dials, and if it's a black hand, that's where we are today, or as of the end of, or the beginning of the month. And if you see any gray hands, that's where the dial was the previous month. And we really have three different changes here: 2 to the negative, 1 to the positive. Your disposable personal income is notched down a little bit, but still at a neutral state, not a bad thing at this point. The fiscal policy, that's gotten more into the neutral category, and I'm sure everybody is a little bit concerned with the debt right now. And then let's go on to inflation. Here's the good part. Inflation has come down a little bit. We're now at 4.9% as of April. Certainly we have not gotten the May numbers in yet, but 4.9% is a far cry from 9%, which was the high. So when you're looking at these indicators, and if this is what it looks like 6 to 9 months from now, and things are still trending worse, what it tells us is that we're not out of the woods from an economic cycle standpoint. We have not hit the bottom yet. Now again, this is not the stock market, this is the economic cycle that we're really looking at here, which forecasts where we're going in the future from the economy standpoint. You know, let's have a great month, Rocky, and you take care of your family, and
we'll take care of you guys. Thank you for joining us today.
yeah, this was great.